Yeah, hello all. Welcome to today's analysis. So let's get started. So before I start with today's analysis, I would like to share one interesting topic, that is how to use the FII's EOD data. So I've mentioned this in the thumbnail also, that how to use the EOD data of FIIs. So when you look at EOD data every day, FIIs keep having their EOD data. It will be bearish sometimes, it will be bullish sometimes. How does that data to some extent help us in getting the market analysis? So I'll try to use maybe today's example also, and just share one case study of bearish, so that the point is taken home. So for this, I'll just use a spreadsheet. So when you look at the how to do this analysis, when you think of a framework, this is what I thought, that first we must see what is how the market is closing today, like what is today's closing. Or you can also take this as previous day closing, since we do this analysis for the next day, right? And what is the FII EOD data indicating, and then what is the next day opening, right? And let me explain properly. So when you look at today's closing or previous day closing, what does this mean is, in this there will be three cases. Like either the market can be bullish, you know just a minute. Either the closing can be bullish, bearish, or neutral, right? So let me write this down. The closing can only be three ways. It can be bearish, it can be bullish, it can be flat closing, or you can. So these are the only three possibilities of a closing. And FIA's EOD data can also be in three ways. That is, it can be bearish, it can be bullish, or it can be mixed, right? So, and the opening, when we look at the opening, opening can be again three types, right? It can be a gap up opening, it can be a gap down opening, or it can be a flat opening. So today I'll share only the bearish scenario of how to think from the bearish scenario perspective. Okay, so bullish can be made likewise. So let me first place this here. So look at the bearish scenario. So what do I mean when it is bearish? See, when the closing is bearish, it means that if price opens somewhere here and it closes at the bottom. So this is the opening price, and this is the closing price. So this is bearish. See, ultimately, what the closing should be lower than the opening. This is one simple way to conclude that the closing is bearish or bullish. So if the market does like this, something, it opens here, it goes up, and it closes down. So this is also, it, since it closed below the opening, so this is also a bearish scenario, right? So in fact, this is what happened yesterday. I mean, why I'm taking bearish example is because of the live market case. So likewise, when you talk about bullish, I'll not be discussing bullish in detail, but just to give an example, if the opening is here and the market closes up, so this is bullish, right? And if the market does this also, like it opens here, it goes down and then it closes somewhere on the high, right? This is also bullish because it is closing at the high, it is closing from the lows also very high. So all this is a case of bullish. So I'll just take the bearish example, so that and later post the other three. So now, and FI data can be of three types. It can be bearish, it can be bullish, or it can be mixed. So what does bearish FI data mean? When I say bearish FI data, it means that FIs they'll write calls, and they will um, you know uh, buy puts, or they will all the negative thing, they'll short the future, such a thing. Basically, I'm talking about derivative FI data. So and this data is freely available anywhere. You can access this data. For example, if you, I think, probably Google FI data, there are many people who post this freely. I'll just show example FI data. If you can just Google it, you can see, yeah, if you can find many people who are freely doing this exercise. They post the FII, DIA data, right? So you can see here that on a daily basis people are posting the FII data. For example, if you see yesterday's example, you find that FII data was bearish. They sold future, they sold calls, and they bought puts. So likewise you get this FII data. So it is bearish. Bullish is the other way around. They buy calls, they sell puts, and they buy future. So now what does it mean? So now this can be likewise just a minute. So you can see that it can be bullish, and in bullish also there can be three scenarios, right? And if it is bearish, I mean flat also, you'll have the three scenarios. So now just think from the probability perspective, what could happen if this is the case. See, if the market is bearish and the EOD data is also bearish. So if the market is bearish, what do you mean by bearish? The market has opened here and it has closed somewhere here. So now the EOD data is bearish. It means that the bearish positions have still not been closed by the FIIs. So when will they close? Of course, it is their discretion, but they're likely to close it at a further lower level. Maybe somewhere here they want to close the bearish positions because they look for maximizing the profits. So, but opening is not in our control. Opening happens based on global cues, etc. So now in the bearish situation, market when it opens, gap up, it opens somewhere here. Now think from the FIS perspective, they have bearish positions open and the market is opened here. Now of course the positions will be since they have bearish positions, they need to close it. So they'll not close it straight away, right? So the probability is high that the price is brought down and then closed, and then long positions will be made for it to take higher. So this is the case number one, which happened today, where the bearish position was there and the market gapped up and it came down. Why? Because the bearish positions were there, and then from here you could see some bit of put writing in the day, and the market went close higher. Now the second case, when the so let me write this down. So what I was trying to convey is, when there is a gap up, it is likely to go down, right? So it's likely to go down, and then based on the intraday OI live OI data, it will take its future course. But the probability that this you will come to know that it is likely to go down, right, because of this scenario. And now in the second case already, the second case is it will gap down. So the market is what I'm trying to do is, the opening is here, the closing is here, and the price gaps down. Second case is gap down, so price has already gapped down. Now the already bearish positions will be in perfect profit. So now they will close the bearish positions, right? They will close the bearish positions, and based on the intraday sentiment prevailing, either it can go up, stay there, or it can go down based on the intraday how the OI is developing. So this case opens for when it's likely, the chance of likely to book the profit increases, right? Because it is already in the favorable positions, right? So and then based on the EOD data, I mean intraday, it will take the future direction. So this, and then when it is flat, it is likely to again go down because of likely to take a dip, right? So or I'll use the same, likely to go down. Yeah. So then it will take the future direction. So I hope the getting the context what I'm trying to convey. When the EOD data is bearish. These are the probability scenarios it can happen. Now let me take the example of today. So when you look at the chart, you can look at both Nifty as well as Bank Nifty because both are roughly the same. So for this case, let me use Nifty. So you can see that yesterday, what the market did yesterday, market, you can see here that, okay, let me, erase this first. So, so you can see that yesterday, this is yesterday. Okay, let me also remove today's price action. Yeah, this is better. So now, what are we trying to discuss? We're trying to tell that yesterday's market, you see, is it opened, it went up, and it came down, and it closed somewhere here. So that is why this is from the opening price is closing somewhere here. So this is negative or bearish is what I'm trying to tell. So this is bearish. Now, first point. Second, look at the FII's EOD data. So when you look at FII's EOD data of yesterday, what you conclude? FII's EOD data of yesterday, I'm talking about, like yesterday, you can see that you can use any platform. All the platforms give the FII your data. So FII's data were bearish. You can see here that FII is sold calls, right? This is bearish, and FII is also bought puts. So this is clear. But even calls and puts are in the same direction, the chances of it being right is even higher. And you can see that they have also sold index futures for Nifty as well as Bank Nifty. So it is like the derivative completely is, you can see it is bearish. Only the cash market data is positive, but we generally um, ignore it when the amount is in this range. But look at the derivatives data because we are more interested in the derivative trading. So the derivative data is clearly bearish, right? There's no doubt about this. Now, this is the case what I was talking about. When the EOD closing is bearish, EOD closing is bearish, then the EOD data is also bearish, right? So now both bearish, and today market, did a gap up, right? So we gapped up today. Now, what we discussed, when it gaps up, because of the bearish positions, there is a likelihood of it going down. And then based on the uh, intraday data, we can take the positions. That is, if the bearishness increases, it will further go down, or if it can stay flat, or it can go up. So, this is what happened today. That since it was bearish, you can see the price. Why it will take such a huge plunge? Because of the negative FIR data, and it takes support. Now it stops falling here, right? Uh, so the market was taken lower to close the bearish positions as we discussed, and then the the bearish positions are closed and the new positions are made. So this how you can confirm. You can see through the live OI data which is developing. Like for example, if I use the sensible same OI, you can use any platform. Now, what is happening here today? You can see that first the bearish in the opening first 15 minutes, you see that the call rating was relatively more, right? But and there's put on, so that's why the market fell in the morning. But what you are observing is a trend. You can see that the call rating gradually is reducing. The call OI change, although it is there, but it's gradually reducing. What does this mean? It means that the call rating positions are slowly being taken out, and then you can start seeing the put writing, call unwinding, put writing, call unwinding, call unwinding, call unwinding, call unwinding, put writing, put writing, put writing, put writing, right? So I hope the point is conveyed that when the market is going down, is it going down with an increasing call rating? So if it is going down with increasing call rating, then it means that the fall will be more. Like when the market is going down, when the market is falling, like what happened today, is the call rating increasing, right? So if this is happening, then the fall will continue further. But that was not the case. The case was the call rating started to gradually reduce. What does this mean? It means that the sentiment to take the market further down is not there. And will it reverse? That depends on the put writing. Now this is a call case, and if the put writing starts to increase, now you can see it starts to increase, stays there, it stays there, it stays there, it stays there. Call unwinding starts, put writing, put writing, put writing, put writing. So what does this convey? It conveys that yes, the market is not willing to fall and it is reversing. So when I'm trying to convey that, uh, look at the intraday data. So intraday data means this: after the it's likely to go down, and after it is going down, see the intraday live data to confirm the future direction. So at least till this part, our direction becomes, because seeing the live uh, intraday live OI data is very much crucial. Yeah. So what I was trying to convey is that today was this case. There was gap up opening, and there was likelihood of price going down, and then based on intraday data, it can take future course. So when I have to replay this, and it went down and it's going up. Why it's going up? Because of course we have discussed many from many days that price is taking retracement and has taken 50% retracement. So this is also again a healthy sign, right? Price is bouncing from the 50% zone. So the price levels we are pretty much clear till where it can bounce, and then it start go up. So just confirm if there is put writing and call unwinding, right? You can see that there is call writing intensity getting reduced, and put writing started to increase continuously, and there is call unwinding. So what you need to confirm is only this, that the call rating should recede. That's it. So call rating intensity has gone down, and in fact you can see call unwinding also and put writing. So this is the clear case that it's going up. So I mean, this is how the big players play the range, is what I'm trying to convey. I mean the bigger range. So yeah. So and you can see that if I have to complete this replay, price closed on the, it goes and closes on the these are just intraday moves for stop loss hunting. So you can see the price closes at the top because there is put writing as well as, so intraday sentiment from 10 o'clock is positive because there is put writing as well as call unwinding. So market closes towards the top, and only since the EOD data was bearish, EOD data is bearish. So even when there's a gap up, likely to go down and then take the future course. So this is what happened, today. So I'll get example today, so that I wanted such a day to explain this concept, and then again it is same. When it is gap up, what it will do, it's very clear. So now think of the other two cases. I'll just finish the, see when the previous day closing is bearish and we have a bullish EOD data. So bullish EOD data, and market again has three scenarios. It can only do gap up, gap down, and flat. So if it is a gap up, what can happen if the position is bullish? What there is likely to, again the same thing, likely to book profit, right? Likely to book profit, and then based on intraday live data, it can take the uh, future direction. If it is gap down, no, it's the reverse. It's likely to go up instead of down. Now it is likely to go up, and then we must also look at the, yeah, yeah, this we will anyway see. EOD live data is anyway, we have to see this to see how the live trend is developing. But the previous data helps us to gauge the starting point and ending point. And then if it is flat, again the chances are that it can likely to go up, and then based on intraday data, it can take the future direction. So I hope the concept is getting uh, what I'm trying to convey is pretty much clear, right? So there was one bullish example, like day before yesterday. So when you talk about day before yesterday, see this is the case. See, you see that the market uh, starts here and it closes towards the top. So this is a bullish closing. It opens here and it closes here, right? So this is a bullish closing. Now, what was the FII data on Monday? When Monday EOD, it's high likely that FII data is bullish. Right? I think they had posted this in the community tab also. Let me show this. On Monday evening, I had posted the FII data in the community tab, right? So you can see the FII data here, and also mentioned the, yeah, see this good put rating by FIs. Yeah, this was the data on Monday. You can see with any people who are posting the FI data that they have, I mean, this way more call put writing than the calls which they are holding. Of course, they had shorted calls also, but look at the net effect. When you look at the net effect, it's like way more puts being written. So that's bullish. And if you can look at any other data also, like this is 9th May's data. I mean, this is yesterday's data, right? So I mean, you can use the same source. I think this is FIR data. Somebody's publishing this. If you just scroll below and see, you can see here it's pretty clear. It is bullish. They've bought futures. Only thing they've sold calls, but the net effect is they've sold more puts. That's why it's bullish. So it makes this case that in the bullish example, uh, wait, flat you can anyway. In the bullish example, the EOD data is bullish, and there can be three cases again for that. It is a gap up, gap down, and flat market. What it did, it on this day it opened gap up, right? Since it opened gap up, since the EOD data, I mean, it was a minor gap up. Of course, if it was a major gap up, then so it's like a flat, almost flattish scenario. So the likelihood, to book profit, it's likely to book profit, right? So when it is flat, it is like likely to go up, and then you have it. So this is what happened on Monday, right? So we can see that it was almost considered a flat to since the data was bullish, the big people took it further up, closed their bullish positions, and created started to create short positions. Now it closed here. They carried short positions. They closed the short positions here and tried to create long positions. I hope you're getting the chain in which the big people are, trying to operate in the market. So this again, this is just based on observation. What I'm trying to say, nothing like a rocket science. It is just pure observation of the EOD data and how the market is trying to behave. So yeah, you can see this also in the like yesterday's live OI data. If you see, if I have to scroll this back to yesterday, it's the same thing, right? From in the morning, in fact, it's a repetition. Uh, when the market opened yesterday morning, the put writing, gradually started to recede, right? And then call rating started to increase. Like what happened today, you can see put unwinding taking place, and call rating. So that is why what happened. Market closed towards the bottom uh, yesterday. So overall, I think the concept is pretty much clear. I took some time to explain this. How can we use the EOD data to our advantage? Because it's just one useful piece of resource which we can use to at least take some probabilistic. See, market is full of a high probability setup. So how, with the help of data, we can reach to a logical conclusion? That is what we have to see, right? So I've made the bearish case. Maybe bullish I'll just complete. So let me come back to the intraday analysis. So now with this context, we know that the first candle is pretty much negative candle. You can also see that uh, yeah, you can see that the first candle obviously is negative. Now we know the AOD position is bearish. It is likely to go down, and you can also see that the delta is almost lost, almost 43 to 24, or you can take almost half. There is loss, so it is again bearish. So confirming our bias. Now it's going down further. You see the delta. increased, but the delta started to decrease, in the sense that the next candle you're not seeing a higher delta. It shows that then it's not a selling delta, and you can see with the increased delta, the candle being created is a hammer. So now it's clear confirmation that the limit buyer has entered the scenario, and now it is going upwards. So in fact, I took a Nifty call trade today because Nifty was a bit stronger than, and I bought call around somewhere here and I sold it here. So I mean, this is how with the help of data we can see that, and then the usual analysis starts as it goes up. If it is genuine, the delta should increase. The delta increased, right? You can see that the delta increased. You can see delta is increasing, and since the market is awaiting a key data point, that is the US CPI data, it is just a broad range, but in this range also we can get such opportunities. And when it comes down, you see that there's not much selling, or this will be a one-off selling candle just to hunt the stop losses, right? So when you start seeing such exhaustion, price will dip, gather liquidity, and go further higher. You can see increasing delta in every up move. So this was the from the order flow perspective, how to look at the EOD data. I mean, the intraday order flow was pretty clear. It was not a selling day. So this was the overall order flow. It closed at day's high. Now it is likely that the EOD data would be a bit bullish because the price is closing at the day's high. So tomorrow there is expiry. So based on today is a big day, CPI data. So maybe positions considering both sides would have been opened by the big players. Based on that, we can judge the future course tomorrow. So overall, I hope this concept is clear. Coming to the macros again, macros again today is a big day. Oh, you can see dollar index cracking. Maybe the CPI data is out, but anyway, today the dollar index was pretty much flat. It was inside the yesterday's range till it doesn't break its yesterday's range. So it's like neutral. It's like an inside bar. So, and coming to the levels, as we discussed, levels of Nifty to support at point 0.5 level, it bounced overall for this range. And coming to Bank Nifty also, as you can see for this range, uh, Bank Nifty has created a big range actually. When you look at this range, you can analyze it both ways. Like you can take this swing to this low. You can find that Bank Nifty somewhere is uh, trying to come. Yeah, it got rejected at 0.786 level, and came down today. So when it is coming down, actually we have to see the other way, but still it is, for this entire retracement, it is still closing above 0.618. I mean, the closing is pretty good, because if something beats 1.618, the likelihood of it to reach the high increases. So, and you can see that from here, if you take from this swing low, it is taking support around 0.786 level. So again, this is also a deep pullback, you can say a deep correction. So, and then it took the second support was at point 0.5 level, and then it closed at the higher rate. So this is how the price action, the levels were respected. And then coming to the max pain. So when you look at the max pain for, since tomorrow's expiry, the max pain levels, we can just see for Nifty, max pain is at 250. So 250 is the max pain currently. So what does this max pain indicate? That if when you look at the spot price currently, why it is showing bearish? Nifty is at 18315. So max pain is at the level where sellers get maximum gain, or this is written from the buyer's perspective. Buyers have maximum pain. So where buyers have maximum pain, sellers have maximum gain. So currently the spot is at 315. Since max pain is currently at 18250, we can expect a dip till 250. I mean, this depends on tomorrow's OI sentiment also. If max pain shifts higher, then I cannot expect a dip. But if max pain remains the same, then we can, of course, expect a dip. Of course, this is a not a sure short case, but a probability. And I'll discuss about max pain in future. But hope today's broad analysis was helpful. Thank you.